concentrate, because the Bank of England have announced that it will raise interest rates to 4% in another attempt to stem high prices. The increase in borrowing costs from 3.5 is the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10th in a row, and it takes the rate to the highest since 2008. Now, those of you of a particular age, go, oh, Ed, what are you talking about? I'll remember when it was 15%, whatever it is. But it hasn't been that for a long time, has it? It's been historically low, and it's been low for so long that I think there are a number of people who think that that's what it is. The rise will take mortgage payments for some homeowners and those with loans at a time when many people are already struggling. It will take it through the roof. Probably got examples of what it might mean, but certainly I'm like you, if you've got a mortgage, and I'm watching to see what that means when it comes off of the rate that the Chancellor in my house, Mrs. Nesto, has put it on. It should benefit savers though. My mum's never unhappy about things like this because she's a saver. And of course, it has been rubbish for savers, this low interest rate, hasn't it? Ripon Ray, also known as your Dr. Debt, joins me now. You got a job to do, Ripon.
Eddie, you're right. The job is immense, but you can understand me when I say that the one man can't fix the world. The world sometimes has to fix itself, and governments play a part.
No, it's too soon for that kind of humour. Okay, I've just got the news, as has the rest of London who have mortgages, and I'm just kind of trying to work out what it means. First of all, let's break down those interest rates. What do they actually mean?
Right, okay. Very, very good question indeed. Now, when Bank of England increases its base rate, that is the rate that it, i.e. Bank of England, would lend to banks, i.e. Barclays, Lloyds, that we all know. They actually borrow money from Bank of England. So Bank of England lends its money on a rate, and that rate is 4%. However, when the banks borrow money from Bank of England, it naturally has to make money, i.e. Barclays need to make money, so you can't just give 4% to customers like you and me or mortgagees. It has to charge interest. So this is where it gets a bit tricky. In a sense, Bank of England's rate is 4%, but mainstream banks, when they lend money to those who want to buy homes, for example, they have to pay extra. And so that's what it is. It's the base rate, but it's a rate that we all begin. But moving forward, the triple effect is much greater because mainstream banks will charge a lot more based on the interest rate that Bank of England sets.
When I started playing around with money, it seemed to me that the difference between whatever the base rate was, and I accept that it was a lot higher, 7, 8 and up to 15%, the difference between what the bank charged me and what the Bank of England charged the bank was about 0.8% from what I could work out. That distance and what they charge and what they make, that percentage has increased though, hasn't it?
Yeah, I mean, if you actually look at some of the, I suppose, products, if you want to call it, that mainstream banks are charging, as time went on, I think once we hit the beginning of the cost of living crisis, those products are limiting, partly because they were being extra cautious who they lend to, extra cautious in terms of types of people who they lend to, and of course they want to get their return. And if you are in a, let's say for example, in a precarious job, i.e. first-time buyer, where 95% of your mortgage is going to come from, I suppose, borrowing money, obviously it puts you at more of a risk to lend to. And that's why, if you remember, I think about 6 months ago, where first-time buyers could not get any loans for a mortgage, is because creditors are saying, I'm sorry, we personally think you're more of a higher risk. But you're right, those who are benefiting on the whole are the savers who are stashing their money in a bank account where as time goes on it will accumulate. But when it comes to the world of borrowing and lending, as you know, Eddie, one is a winner and the other one has to be a loser. And in this case, we're dealing with, I suppose, borrowers who are losing because they just have to pay more.
Yeah, but I think, and you know this, that actually that 0.1% was not a true reflection of what it has been in my lifetime or probably yours. We got caught up in a kind of false economy there, didn't we?
I mean, well, we may say it's false economy, but if you look at it on the whole, we can't solely rely on what Bank of England is doing. That's one of many ways to assess your financial stress. And that's what it's all about, is when Bank of England increases its base rate, the trickle effect would be that which group will be in financial distress. Now, clearly, in one way, we're dealing with the interest rate, i.e., how much you borrow and how much you lend. But the wider effect, as you know, Eddie, is that every single day people are talking about cost of living. And that goes beyond just the mortgages, but it's the cost of buying bread, cost of buying pasta, cost of buying fish, cost of buying all those things.
Eggs, going to buy meat,
Eggs,
toilet
absolutely.
paper. Well, everything's gone up. I suppose this is the biggest and most effective thing. Is it the only tool? Because apparently, there are lots of economists who think that the Bank of England made a rod for its own back with its quantitative easing because they printed so much money. That's what's partly causing the problem.
Well, believe me, if economists knew the answer and economists also knew a strategic solution, we would not be where we are right now because some things and sometimes you see that economy and respond to the way things go is beyond your control. Now, if you look at it, now current cost of living is looking at it in a sense of how much you're paying also towards your fuel. And Eddie, I'm not sure if you had the chance to look at your gas bill and electricity bill, you see compared to now to let's say 12 months, it at least has gone up by 400%. So there, and if economists knew that would be the case, we would have been a millionaire by now. But unfortunately, that is not the case. So that's why it's impossible to forecast how the future is going to behold because many factors play a part that are beyond our control.
Yeah, but look, I appreciate that. But when you got a day like today where British Gas, through an outside agency, are effectively taking advantage and on people, right? Taking advantage of people when the head of Centrica accepts that. When you've got a day like today where Shell have made more profit than any other company in the history, there's something about today, and it might just be a personal point of view, which might be wrong, but it just doesn't seem fair.
I mean, I agree. That's the thing. So in one way, we talk about interest rates and how it's unfair to borrowers. And now we're dealing with fuel suppliers where Shell is making billions and Centrica, who owns British Gas, have taken customers to court and obtained a warrant and then forcefully put a prepayment meter. You're right. It is unfair. And those seem to be at the receiving end of unfairness are ultimately, I'm afraid, low income families. And interestingly enough, when it comes to low income families, Citizen Advice and Citizen Advice, who I spoke to recently, they said in terms of those who are knocking on their doors, I'm afraid are low income household, and they've seen threefold of increase where they themselves are referring to food banks, and food banks are saying that we just don't have enough food to give to those who are coming and knocking on our door. So you're right. On the whole, there is an imbalance in terms of who is benefiting from it. Shell and British Gas, they are no doubt benefiting from it, but those who are imposing prepayment meters And as you know, Eddie, many of whom they've imposed prepayment they shouldn't have, because the Ofgem guidance states that if you are vulnerable, if you have disability, if you're a pensioner, if you're children, you should not be putting a prepayment meter on these households. So really, although British Gas have done that, what could be could be the impact? I can only think of two. Ofgem would fine British Gas. So the question is how much the hefty fine will be. But obviously, you can't take away the license, because British Gas serves millions of customers, and we can't see customers without fuel.
Yeah, and it's mired in all sorts, isn't it? Because British Gas is under Centrica, and what's happened is they've outsourced it, so they can kind of claim, oh,
Yeah.
I didn't know what was going on. I think it's appalling, because it isn't actually British Gas or Centrica, which is why there are lots of people who have severe doubts about things and essential services or control over essential services, which are outsourced. I'm just let's jump about a bit, because basically I'm really, I'm gonna survive. I'm guessing I'm gonna survive because I've got a few streams, and we're struggling through Mrs. Nestor's, but I'm guessing that, as you said, people who have just bought a house where the house prices are going down in value, and we have the spectre of that thing that we used to call negative equity, which is a word that kind of, a phrase that's kind of gone out of fashion, may well be coming back. Is there any way that you could advise people in terms of mitigation against, what is a hefty increase?
Very good question. In fact, I spoke to a representative of Financial Conduct Authority that regulates consumer credit, and one of the issues that I spoke to them was that what is the ramification for increase in the base rate, and as a result increase in amount
Did they say Liz Truss and Kwasi Kwarteng?
Well, partly that. Well,
would I be paying less for my mortgage if there were no such person as Kwasi Kwarteng and no such person as Liz Truss?
No, you're right that the shape.
No, I haven't given an opinion. Please don't.
No,
please don't say I'm right, because that would suggest that I've given an opinion. I have asked you a question, sir. I don't have any.
You're right. You're right. I think the headache of what had happened, we're still feeling it now, and that's for sure. However, I think since then there has been stabilization of the financial services, and the banking sector on the whole seem to be very happy
it's
about
10
the way
times
things
in a
have
row.
gone.
Stabilization means it's come down, it's steadied, it's leveled. If it's gone up 10 times in a row, it doesn't feel very stable for people who may well be on a variable rate or coming off a fixed rate.
No, I agree. So when it comes to fixed rate or variable rates, it very much depends upon how long your fixed rate mortgage is. If it's for 3 years, 5 years, let's see how things go. If we're expecting things to be hunky-dory, then obviously fine. But the way things are going is very unlikely. In terms of what can your lender can offer you, and from the perspective of the regulator, I guess regulator is saying, and if you remember, Eddie, during the pandemic, there were things like payment holiday, there were things like putting a hold of enforcement, there were things like if you can also write off the debt, although creditors don't have the obligation to do all those things, but the regulator is saying, don't forget, not long ago, we offered a variety of options, and I think we need to revisit those things, and we recommend to the lender that you should look at those things and treat customers fairly. And if it means looking at alternate option that is the cheapest, please provide those things, because we are expecting a tsunami of storms, and in fact, we're in the middle of tsunami storms.
I think so. If you've got house prices going down with interest rates going up, we all know what's coming. One of the things that I saw recently, which was quite interesting to me, was that, because it's something I'm considering doing myself, is that more people were changing bank accounts than at almost any other time. Is that something that you'd ask people to consider, or is that something that's got nothing to do with anything? Because some of these places are offering money, aren't they?
They are offering money, so depends on various things really. One is you have to ask yourself, what kind of bank account do you currently have? Now, if you have an overdraft account with the overdraft facility, how much is authorized overdraft is costing you? Is it costing you for unauthorized? Is it costing you for the fee that you pay on a monthly basis? So a number of factors play a part. So based on this issue, really, I did look into the wider market to see who is offering the best. And believe me, there will still be charges that you incur. There will still be unauthorized and authorized charges, as well as annual charges that you have to pay. So you need to be careful based on what you have now to where you're going to. Would that be better off in the long term, or is it just a quick fix where we'll give you £150 for you to change account, as well as we won't charge you for unauthorized, but we will charge you for authorized? So I think a number of factors play a part, and you have to start from your current situation and then move on to where you want to go, where it's going to be cheaper.
And just finally, I know from your background that it's in crisis management in terms of finance.
Yeah.
I'm guessing not for everybody, clearly not for everybody. As I said, my mum is retired, she collects a pension, she has savings, and she's going to be all right. She's like, oh, I can put my money in my bank now. But there will be a number of people who are the jams, are just about managing. And I wonder if you have specifically a piece of advice for anybody who is, doing what I used to do, which is when those letters come, when those bills come, effectively ignore them and put your head in the sand. Have you got information for people who are just realising that they're in a difficult moment?
Absolutely, Eddie. I think this is pretty much my comfort zone, I guess, if I want to be honest with you. And Eddie, I can tell you, yes, on average, it takes 2 years for anyone to think about whether they're in a crisis situation when it comes to financially anyway. But I would say if you are dreading about opening the letters, first thing you may want to think about is opening yourself up to a friend or anyone who you trust, because there is an old saying that problem shared is problem halved. So once you found that trusted person, and instead of you putting all the burden upon you, and if you talk to someone about it and accepted the fact that you are financially struggling, that it is then a one step towards, I suppose, freedom. Because
hold on. I've been there. I've been in that bank where they took my card and they cut it up. I've been there where I'm like, how am I going to earn the money? The hole is so deep that, and along with the technical exercise of kind of understanding where you are, there's shame, there's embarrassment, and in a way, when I look back on it, there's a form of depression. So I understand what you're saying, and I guess I guess you triggered something in me here now. But please, but I think it's important that when we analyse it, we take on board that person is on a journey, and it's quite a difficult and embarrassing journey.
It is. I mean, you're right. The Brits are not very good at sharing their emotions, and the reality of the world of being in problem in I suppose financial problem is that you do have to talk. Now you can either talk to your friend and the friend can take you to, I suppose, impartial free advice services, which is what you need really to come out of your financial trouble. And you realize that when you are looking at your money, it does ultimately boil down to a number of factors. What money is coming in, and what is the total amount? What is your total amount of debt? And then just like we mentioned about mortgages and other things, they will lend you once they looked at your financial situation. And the same thing with also when you're in trouble financially, we will look at your financial situation to see if the option is going to be paying reduced amount, Is it going to be a breathing space where you need to think about your mental health, or is it going to be bankruptcy and all other options? And there is no one size fits all. Just like, I suppose, mortgage products, it is about person specifics, but of course, I would still say is once you've opened up the letters, once you've had that conversation, it is about going to your local citizen advice bureaus and other free services such as Step Change, who will not charge you, who will be impartial, and then to give you the advice you need to not just simply ways to deal with your debt, but also to find out what money can you claim. Don't be ashamed. We're all, to a degree, are together in this financial storm, and every penny you can save, as well as every penny you can get into your bank account, it's something that you should consider.
Listen, it's great speaking to you, Ripon, and hopefully we can talk again. Ripon, also known as your Dr. Debt, talking to him. I got some reaction from Richard Burge, who's been a regular in this show, who's Chief Executive from the London Chamber of Commerce, and that will come up after we've heard what's happening on London's roads from Billy Reeves.